Assalamualaikum warahmatullahi wabarakatuh. My name is Wan Raizu Rahimi bin Wan Harid, and I will be presenting about my assignment. The title is going to be Introduction to the Islamic Financial System. We go to the first slide. Islamic finance has emerged as an effective financial instrument and gained popularity over the past decades in the Muslim and non-Muslim world. Islamic financial system has grown at a higher rate, but due to the identifiable product, the market is still at the premature phase of development. Furthermore, in most of the Muslim world, the growth level of Islamic financial asset is faster than the conventional system. Islamic finance is a financial structure that follows Islamic Sharia. Sharia is the Islamic legal system based on personal, family, and general norms derived from the study of the Quran and the Sunnah. The organization works under the Sharia guidelines and has to follow Islamic law and financial industry rule and regulation. It will provide a basic foundation to construct complex tools and help to establish risk management tools and enhance the liquidity of the assets. Islamic financial structure includes Islamic bank, sukuk, Islamic fund, takaful, and supplementary Islamic financial bodies. The stakeholders are assumed to ration the gains and losses from the venture while avoiding charging interest. The Islamic financial system is developing day by day due to the growing demand for the interest-free products. The more banks are taking keen interest to expand its branching network by opening Islamic branches. We move to the next slides, which is the philosophies of Islamic financial system. As we can see from the slide, there is 8 philosophies that must be kept in the Islamic financial system, which is prohibition of interest, customer poverty alleviation, halal business activity, gambling, uncertainty, risk sharing, and asset link to the real economy. We go to the first one, prohibition of interest. That is riba. Riba is providing or receiving money at a fixed percentage of interest. There is no place for interest to be used in the Islamic financial system due to its strict prohibition in Islamic law. All individual, banking sector, and other financial institutions can do business by providing financial products that don't bear interest. We go to the poverty alleviation. The Islamic financial system has the future to address the challenges facing society to alleviate the utmost poverty and enhance common prosperity through access to finance, establish a financial sector, and stability. The concept of Islamic microfinance has been developed to help the poor as an alternative remedy to alleviate global poverty. Next, we go to halal business activities. The parties concerned will not be engaged in businesses that are prohibited by Sharia, like smuggling, alcohol businesses, pork breeding, gambling, nightclubs, tobacco, pornography, or casino. This venture will follow Islamic law in true spirit to promote an environment of shared prosperity. We move to the next slide, which is the principle govern of Islamic finance. There is 3 principles. There is principle of equity, principle of participation, and principle of ownership. I will be explaining the principle of equity. Scholars generally invoke this principle as the rationale for the prohibition of predetermined payment, that is riba, with a view to protecting the weaker contracting party in a financial transaction. The term riba, which means elevation in Arabic, is an increase in wealth that is not related to engaging in productive activity. The principle of equity is also the basis for prohibiting excessive uncertainty, that is gharar, as manifested by the contract ambiguity or elusiveness of payoff. Transacting parties have a moral duty to disclose information before engaging in the contract thereby reducing information asymmetry. Otherwise, the presence of gharar would nullify the contract. The principle of equity and wealth distribution is also the basis of 2.5% levy on cash or in-kind wealth, that is zakat, imposed by Sharia on all Muslims who meet specific minimum levels of income and wealth to assist the less fortunate and foster social solidarity. We move to the next slide, which is the key instrument of Islamic finance. We can divide it into three sections, that is PLS product, non-PLS product, and fee-based product. PLS product, or profit loss sharing product, is closest to the spirit of Islamic finance compared with non-PLS financing. Its core principle of equity and participation, as well as its strong link to real economic activities, and help promote a more equitable distribution of income, leading to a more efficient allocation of resources. There are two types of PLS financing, that is musyarakah and mudarabah. For non-PLS product are most common in practice. They are generally used to finance consumer and corporate credit, as well as asset rental and manufacturing. Non-PLS financing instrument included murabahah, salam, ijarah, and istisna. For fee-based product, they have three, which is wakalah, kafalah, and ju'ala. We move to the next slide, the development of Islamic banking in Malaysia. Islamic banking activities in Malaysia started back in 1983 with the establishment of Bank Islam Malaysia Berhad, Pilgrim Management Fund and Board of Malaysia. Lembaga Tabung Haji was established in 1963 with the objective to facilitate Malaysian Muslims to perform Hajj by pooling and investing their saving. This is the first Sharia-based deposit-taking institution in Malaysia. In early stage, Islamic banking in Malaysia provided basic banking services and products such as taking deposits and giving loans without riba, which is forbidden in Islam. As the industry grows, the product offered varies to meet the demand of the users. Currently, Malaysia Islamic banking has widened the services by venturing into Islamic insurance, takaful, pawnbroking, and taking underwrite activity for sukuk. The Islamic banking development in Malaysia was initiated by the commitment of the Malaysian government with the introduction of the Islamic Banking Act 1983 and the Government Investment Act 1983. The introduction of interest-free banking scheme or scheme perbankan tanpa faedah for conventional banking in 1993 was the turning point for Islamic banking system in Malaysia. It allowed the conventional financial institution to offer Islamic product and services. Malaysia was the first country to have this dual license, while others country they just changed the whole system to Islamic basically. The system was still conventional but has a few Islamic touch to it. Bank Muamalat Malaysia Berhad was established in 1999 as the second Islamic bank in Malaysia. The establishment of Bank Muamalat rose from the merger between the Bank Mitra Malaysia Berhad and Bank of Commerce Berhad. The Islamic banking in Malaysia achieved a new milestone in 2004 with the issuance of 3 new Islamic bank licenses under the Islamic Banking Act 1983. That is the financial institution from Middle East, which is Kuwait Finance House, Al-Rajahi Banking and Investment Corporation, and a consortium of Islamic financial institutions represented by Qatar Islamic Bank, RUSD Investment Bank Incorporation, and Global Finance House. Global Investment House. The presence of full-fledged foreign Islamic bank in Malaysia would increase the potential to tap new growth opportunities as well as raise the performance and development of the overall Islamic financial system. As Islamic financial system grew rapidly, leading to a higher demand for personnel, conversant and competent in Islamic finance. This scenario led the Bank Negara Malaysia to establish the International Centre for Education in Islamic Finance in 2006 to offer professional certification and postgraduate programs as part of the effort to build the necessary talents and skill in Islamic finance. The Malaysian government launched the initiative known as the Malaysia International Islamic Financial Centre in 2006. The centre will be offering Islamic financial products and services in international currency with a large pool of highly skilled Islamic finance experts. In an effort to achieve the centre initiative, Bank Negara Malaysia issued international Islamic banking licenses to allow the bank to provide Islamic commercial and investment services denominated in foreign currencies in 2008. Islamic financial sector through entry point project. The government target to increase Islamic financing share to total financing in Malaysia from 29% in 2010 to 40% in 2020, reflecting the country position as a global leader in the industry. The government also target for at least one local Islamic financial institution to be among the top 10 Islamic financial institutions in the world in terms of asset by 2020. Furthermore, financial sector blueprint for period 2011 to 2020 was announced in 2011 will focus in 9 areas, and one of it is internationalization of Islamic finance. We move to the Islamic financial regulatory body. There is Islamic Financial Services Board, accounting and auditing organization for Islamic financial institution, Sharia Advisory Council of Bank Negara Malaysia, International Islamic Financial Market, the International Islamic Liquidity Management Corporation, and Islamic International Rating Agency. For example, we can look at Islamic Financial Services Board was established in Malaysia 2002. It was developed in connection with the International Monetary Fund and Basel Committee on Banking Supervision. It focused on the standardization of procedure and interpretation. For International Islamic Financial Market, it began its operation in 2002, aiming at standardization of Islamic financial product, documentation and allied process. The main objective of the body are to establish an international financial market grounded on Islamic Sharia, maintain an active secondary market, and ensure active participation of Islamic and non-Islamic financial institutions. Malaysia and Indonesia has entered into an agreement to establish International Islamic Financial Market. Then we go to the International Islamic Liquidity Management Corporation, that is established by central bank, financial authorities and multilateral organizations to develop and issue financial instruments which are in compliance with Sharia to facilitate cross-border Islamic liquidity management. Last, we can see for Islamic International Rating Agency, it provides independent assessment to issuer and issues that conform to Islamic finance principle. It focuses on development of capital market and to develop the Islamic finance sector. The agency is a facility provider to support Islamic finance, and it is supported with accounting and auditing organization for Islamic financial institution and Islamic Financial Services Board guidelines. To conclude, the implementation of Islamic financial system is not the end goal. It is in fact a mean and tool of competitive advantage for the Ummah success, including economic wise. Moving forward, the Malaysian government will continue to invest in human capital development. It is important for the Islamic financial services industry to constantly promote human capital development and expertise to create a larger pool of expert and high caliber. That's all from me. Assalamualaikum warahmatullahi wabarakatuh.